Okay, good everyone. So for those asking me how to mark break of structure and also how to know the valid order block or breaker block to use on a particular trend, so this video is for you. So today I'll be doing a quick video on that. So you know, price usually creates break of structures on multiple time frame, and as for me, I always use multiple time frames to take my entries. And for a break of structure to be valid, price has to break above the previous high. That's for an uptrend. Price has to break above the previous high. So this is a valid break of structure. This is a valid break of structure for an uptrend. Then for a downtrend, this is a valid break of structure. Each time price break below the previous low, that's a valid break of structure for a downtrend. And how can you be able to mark this break of structure each time you open the chart? So first thing first, all you have to do first is to look for a particular point where you where price did a market structure shift. So each time you open the chart, always look for a particular point where price did a market structure shift. So that can help you as a guide to be able to spot the particular trend, either on the 1 hour time frame. If you spot the break of structure or the market structure shift on the 1 hour time frame, you can then go down to a lower time frame to look for the order block or the breaker block. Then from there we start marking the break of structure. So for a market structure shift to be valid, each time price is in a particular trend, this for an uptrend, each time price is on a particular trend, then you see price break below this previous low, it must break below with a full body candle. If price break below the previous low with a weak candlestick, that's not a valid market structure shift. The market structure shift is invalid. So price must break below with a full body candle. So you see this retest, price must go back again to retest on either an order block or a breaker block. Then you see price distribute to the downside. So this region where price broke below this previous low, this is the market structure shift or the change of character. This for an uptrend. Then also, if price is moving in a downtrend, then suddenly you see price break above the previous high, that's automatically turned into a market structure shift, meaning the downtrend is no longer valid anymore. You see price creating break of structures to the upside. So now this region where price broke above the previous high, this is the market structure shift. This is the market structure shift. And also for the market structure shift to be valid on this uptrend, price must break above the previous high with a full body candlestick. If price break above the previous high with a weak candle, that means the market structure shift is invalid. So now, how will you be able to spot a market structure shift now? So now if you look from this particular chart, you can just open the chart, then you can check multiple time frame. You can either start with, like me, I prefer using from higher time frame. I do the top down analysis. I always start using from higher time frames, and I'll look for the particular trend that price is going on the higher time frame. Then from there, I'll move down to lower time frame to be able to take entries, like quick entries, because if you should look for entries on higher time frames like 4 hour time frame, or the 2 hour time frame, 3 hour time frame, 1 hour time frame. It's for the 1 hour time frame, it take price 1 hour for each candlestick to form. So now, if you should wait for, and for the 1 hour time frame, you just have 24 candlesticks in a day to complete 24 hours. So you just have 24 candlesticks for that day. And if you should take a setup on the 1 hour time frame, it might take like 4 days, or let's say 3 to 4 days, for price to trigger your point of interest before taking that trade. But if you should use a lower time frame, like 15-minute time frame, or the 5-minute time frame, 30-minute time frame, those are time frame you can use to take day to day. Like if you're a day trader, you can use those time frame to take day-to-day trades. But for a swing trader, you can decide to use the higher time frames, like 1 hour, 4 hour, just like that. So now this is on the 1 hour time frame. So first thing first, when you open the charts like this, always look for points where price creates a market structure shift. Then you look for where price creates multiple break of structures. Now, so now I'll be using from this point, now this region here, I'll be using this as an example. So now when you open the chart now, for example, let's say price is in this region, and you open the chart for the day, and you see price is on that region. Now if you look closely at this point here, you will see there's a market structure shift there. So now from that region, when you spot that, if you go to the lower time frame, let's go down to the 30 minutes time frame. So on the 30-minute time frame, if you observe here, this is the last break of structure price created. This is the last break of structure price created here. So once you see this kind of movement to the upside, is in a curved way. You see price move in a curved way, pushing to the upside. Then you see a sudden drop to the downside, meaning price has created a market structure shift on this point here. So you see the curve movement there, creating a break of structure. Then you see price now push to the downside, creating a market structure shift here. Meaning the uptrend is not valid anymore. So now if you should trace this back, you see this is the order block. And if you watch my first videos, I showed you guys examples of order blocks, how an order block look like, and also how to know if an order block is valid or not. So that for you to be able to know what an order block is, you have to watch my previous videos, the ones I posted early. So this is the order block, and you see immediately price tap into the order block, it distributed to the downside. So now price distributed to the downside, taking out this previous low. Price must always take out this previous low with a full body candlestick for the order block to be valid. So always note that price must break below the previous low or the previous high with a full body candlestick for the order block, for the break of structure to be valid rather. So now this is the first break of structure. So you see, you always have to use multiple time frames so you can be able to spot when price creates a market structure shift or when price is creating break of structure. So this is the first break of structure. Now price broke below that previous low, and now if you should look from this other side here, after price broke below the previous low, remember what I told you, you have to look around if you will see a valid breaker block. So now you have to go down to lower time frame to look for a valid breaker block. If you didn't see a valid breaker block there or a valid order block there, just know if you didn't see a valid breaker block, so because gold, especially for gold always use breaker block. It doesn't respect order blocks, so I always use breaker blocks when taking my trade for gold. So now if you should look from that point, even though you go down to multiple lower time frame, you won't see a breaker block on this left side. You won't see a breaker block on that left side. What you will only see is an order block on the 30-minute time frame. So the 30-minute time frame, what you will see is an order block. And remember what I told you on gold doesn't respect order blocks. It's only use breaker blocks. So these things I'm telling you, most traders won't tell you this. So make sure you always subscribe to my channel so you can always get updates on my videos, because each time you skip some videos, you probably skip some of the process of the strategy. So you can see this is the order block here. Remember what I told you, gold don't use order blocks. Gold only respects breaker blocks. So now if it was to be Euro USD or GBP USD or BTC USD and some other pairs, you will see price now come back again for this order block. After the break of structure, you see price again come out for that order block before distributing downside to the downside. But since gold doesn't use order blocks, you see price didn't go for this order block. Instead, price just continued the downtrend, creating multiple break of structure. So on next thing next, so after the break of structure, this is the next liquidity. And how do you know that's a liquidity? You can see the weak candlestick there after the break of structure. You can see the weak candlestick there. So that's to tell you there's liquidity on that point there. So now you see price now break below. So you just have to keep following the trend. So now you see price break below, creating another break of structure there. See price break below, creating another break of structure there. Then now, if you should look from this region, you won't see a valid breaker block. Even if you go to the lower time frame, you won't see a valid breaker block there. So that's why price just ignored and just keep moving to the downside, creating multiple break of structures. So now on this point here, you can see the next break of structure. So you always have to keep marking every previous low. Each time price take out every previous low for a downtrend, that's a break of structure. So after the break of structure now, you have to keep going down to lower time frame to look for a breaker block. If price creates a breaker block, you have to keep going to a lower time frame. So you have to keep going to a lower time frame until you are able to spot the breaker block. Okay, price can't go beyond this point here, so let's just continue from this point. So now if you should go back to a lower time frame, like the 5 minute and the 3 minute time frame, you will see there's a breaker block at this point here, and price will always use the body of the candle, but you can always use you can also use the wick of the candle, but it's more advisable to use the body of the candle. But in most cases you can use the wick of the candlestick because of spread. That's if your broker has a very wide spread, you can use the wick of the candlestick. But if your broker spread is okay, you can use the body of the candle. So breaker block, see price again distributed to the downside. creating another break of structure from here. So each time price retest on a breaker block, it must always go down to take out liquidity, creating a break of structure. So this is the next break of structure. This is how you can always mark break of structure. So now from this point, this is the next break of structure. See price again, retest on another breaker. If you go to the lower time frame, you will also spot a breaker block again. Then you see price come down, taking out this previous low. As the liquidity, creating another break of structure. You see that? So the only time you can only see gold use an order block is mostly when gold creates a market structure shift or a change of character. That's the most cases you can see gold use an order block. But if you see gold creating break of structures, there's a high probability for gold to use just the breaker block. So you see that price created another break of structure there. So what next? You go down to lower time frame. So you go to a lower time frame. You can see the last break of structure here. You can see the last break of structure here, taking out liquidity. So you must always know how this stuff work. You know, from the first side, when we mark this break of structure, from this first side where we mark this this market structure shift, you can see price move in a curve way. Price moved in a curved way to the upside, creating a break of structure. Then you see the movement down again, creating a market structure shift. So now if you should look at this other one here, this one here, you can see price move in a curved way to the downside, then distributed back to the upside. So this curve, from where price created this curve, that's a break of structure also. Then the movement breaking above the point, the region where that caused that curve, that's a market structure shift. That's why you see price now broke above this point, creating a market structure shift at this point here after the break of structure, you see. So that's a market structure shift. Then what next? You look for an order block. You know, each time price creates market structure shift on gold, it's usually use an order block. But if it's for a break of structure, it use a breaker block. So you can see from there, if you go down to a 30-minute time frame, you can spot the order block there very clearly. Okay, you can decide to take it from here. You can decide to take it from a lower time frame also. If you should use here, it's still valid. Use the beginning of this point as your OB. It's still valid too. If you don't want to use that, you can also use this as your OB. So you see, after the market structure shift, price came for that OB, retested. So this is to tell you the downtrend is not valid anymore. So this is how you can always mark break of structures when you open the chart. So that's to tell you the downtrend is not valid anymore, and price has changed to an uptrend. So you see, after the retest on the OB, price came for this buy side liquidity. So each time price retest on the OB or breaker block, it must always take out previous high liquidity. That's why you see price always came back for OB. See this point here. If you trace it back, after this break of structure, now you see price came back again for the OB, retested on it on these points. tested on that OB from this point, on the OB from that point, then you see it push again to the upside, creating another break of structure. Came back again. If you should go to a higher time frame, so after the break of structure now, you always have to look for either an order block or a breaker block. So you always have to look for that, checking multiple time frames. So let's go to a higher time frame. You can clearly see it here, and this point here. So you see price came, so that point of interest, then push to the upside, taking out this previous high, creating another break of structure. So after the break of structure, what next? You look for another region where price will probably retest on. So now if you should look on this time frame, you won't be able to see any valid order blocks or valid breaker blocks that price will probably retest on. So now you have to keep checking multiple time frames so you can be able to spot it. So you have to keep going down to a lower time frame so you can be able to spot that point of interest. Okay, see from this you can see breaker block there, or you can also call it the OB. Let me go down to 30-minute time frame. Okay, you can clearly see it there. You can call it the OB or the breaker, but I identify that as the OB. You can see primitive price tapped on it, push to the upside again, taking out this previous high, creating another break of structure. So you must always know each time price move in this pattern, breaking above every previous high, that's a valid break of structure. So now from this point here, you can see price has been following that pattern. From this point, it's always break above every previous high. You can see, okay, from this point it's always break above every previous high. It's always break above every previous high, then come back for the OB or the breaker block. See, price must always break above with a full body candle. It must not break above with a weak candlestick. So you can see it must always break above with a full body. It must not break above with a weak candle. So the price has been following that pattern. From the point where price break above the liquidity, and you look for your point of interest, allow price to retest on it, then you take your entry. You see from this point now, price created the OB there. What should you do next? If you can't spot a valid order block or a valid breaker block, what should you do next? You go down again to a lower time frame. Keep going down to a lower time frame. Okay, you can clearly see the order block here. If you trace it back, you see price retest on it. So all these things I already mark it out on my screen. So it's much better for you to always do a back test, mark your break of structures down, your order blocks, mark everything down. So each time you open the charts, you don't have to do another back test to know where price is headed to. So once you already have this, that's why you see I always put them on my chart. Once you already have the break of structures marked down on your chart, once you open your chart, you must always know the direction price is heading to. So you see after price retested on this OB, it broke above this previous high, creating another break of structure. You see, you can clearly see this breaker block here. Price came for that breaker block, and you see it retested on this region here. So one thing you should know, for a breaker block to be valid, first thing you should know, for a breaker block to be valid, the breaker block must either grab liquidity. There must be a liquidity grab for a breaker block to be valid, and also the breaker block must either be protected or the order block must either be protected by liquidity, or there must be a fair value gap by the side of the breaker block. That's the only way a breaker block can be valid. Number one, the breaker block must grab liquidity. Number two, the breaker block must either be protected by liquidity. Number three, the breaker block there must be a fair value gap by the side of the breaker block. So you can see this is the liquidity grab at this point here because of the breaker. The breaker block must grab a liquidity, so that's the liquidity grab. So each time price uses the breaker block, you must always see liquidity grab. So you see, after price uses this breaker block now, it pushes to the upside, creating a break of structure at this point here. So what next now? You look for another liquidity. So now you should go to the 30-minute time frame now. Let's move to a higher time frame so we can be able to spot the next okay, let's still go higher, 1 hour, so we can be able to spot the breaker block. Now see the breaker block here. How is the breaker block valid now? There must always be a liquidity grab. This is the liquidity grab here. And how do you know it's a liquidity grab? So I'll be showing you how to know if it's a liquidity grab. So this is the liquidity grab here. So for you to know if it's a liquidity grab, you must see price now. Price now took this liquidity at this point. Then you see the sudden rejection after price took the liquidity. You see the sudden rejection back to the upside. So that's a liquidity grab. You must always see that rejection back to the upside after price cleared liquidity at this point, took out this liquidity. You see the rejection back again to the upside. Then you see the sudden push. So that's to tell you that's the liquidity grab, and the breaker block is valid. So that's to tell you that's the liquidity grab, and the breaker block is valid. So you see price now came for the breaker block, we tested on it at this point, then pushed to the upside now. So now this is also a breaker block. And what makes the breaker block to be valid? Let's go down to a lower time frame so you can be able to see the liquidity grab I'm talking about. So let's go down to a lower time frame. Okay, let me still go down to 15 minutes. So you must always use multiple time frame. Okay, so there's liquidity resting at this point. There's also liquidity resting at this point here. So you see immediate price clear out this last liquidity here. If you should go to a lower time frame, okay, let me still push down again. Let me still go down to 5 minutes. Let me go down to 5 minutes now. Okay, price can't move beyond this point, so let me just use the 15 minutes instead. So you see after the liquidity grab at this point here, you see price now push to the upside. You must always see the liquidity grab, then you see the sudden movement to the upside. That's to tell you this breaker block is valid. That's the confirmation to tell you the breaker block is valid. So let's move down to the normal time frame, which is 30 minutes or 1 hour time frame. See, if you should mark this out now, this breaker block now, trace it back, you see price retested on it at this point, then push to the upside again. So now what next? After that, you look for another breaker block again, because you know price now use this breaker, retest under the breaker, taking out this previous high. That's another break of structure again. So what next? You look for another breaker block, checking multiple time frame, and for you to know the breaker block is valid, there must be a liquidity grab. That's why I drew this liquidity at this point using this dollar sign. So that's the liquidity grab. If you should go to a higher time frame now, you can clearly see immediate price took out the liquidity. You see the sudden rejection. And another thing to remember, what I told you, for a breaker block to be valid, it must be protected by a liquidity or a fair value gap, or there must be a liquidity grab. So now if you should look at this point now, this is the fair value gap here. It's protected by a fair value gap. So now if you should mark that fair value gap now, you see also price also tapped into the fair value gap, pushing to the upside. So price has created another break of structure at this point. So this is the next breaker block. This is the liquidity grab at this point. You see the rejection after price cleared out this liquidity. You see the rejection again to the upside, triggering a break of structure. So now trace this breaker block now to the other side. You see price now came for the breaker block. Price came for the breaker block again, taking out previous high again, creating another break of structure. So what makes the break of structure, the breaker block, valid? What makes the breaker block valid at that point? Remember what I told you, there must be a liquidity grab. So now this is the breaker block. This is an order block that got violated. So now this is the liquidity grab. You can clearly see the liquidity grab and the rejection. So that's the liquidity grab and the rejection. You see sudden movement to the upside, creating a break of structure. And if you should trace the line, you see price came back again for the breaker block, creating another break of structure. So now at this point now, I mark another breaker block at that point there. And what's from the rules say that there must be a liquidity grab. The breaker block must either be protected by a liquidity, there must be a liquidity grab, and it must either be protected by a fair value gap. So now from this point here, this is the liquidity grab. You see price now cleared out this whole liquidity at this previous low. Then you see the sudden rejection to the upside. So this is the liquidity grab. You see the sudden rejection to the upside again, breaking above this previous high, creating a break of structure. And you see price has been ignoring that order block. Price has been this breaker block here. Price has been ignoring this breaker block. So now, and you know the other rule, it must be protected by a fair value gap. So now if you should look at this point here, you can clearly see there's a fair value gap here. There's a fair value gap here, and it's protected by a fair value gap. So that's to tell you this breaker block is valid, and price hasn't retested on it yet. So you see price has been creating multiple break of structure ever since, just like that, multiple break of structures without retesting on a breaker block. Price has been creating multiple break of structure, ignoring that point until it got to this point where it created a market structure shift. I already explained about this part on my last video. So you see since then price has been creating multiple break of structure to the downside, multiple break of structure up to this point. So let's go down to a lower time frame. So let's go down to a lower time frame. I want to show you guys something. Okay, you can see from this first point here where price retested on this breaker block. So if you watch my previous video, you know what I'm talking about. Retesting on that breaker block, it came down to take out this previous low, creating a break of structure there. Then from this point now, you can clearly see this breaker block here. Trace the line back. Price came for the breaker block at that point there. Came for the breaker, clear out liquidity, creating a break of structure there. Creating a break of structure there. Came back again for this breaker, for that breaker block. Push to the downside, creating a break of structure again. So price now was supposed to come for this breaker block. Price was supposed to come for that breaker block, but instead price ignored and kept on moving to the downside, creating multiple break of structure, to the downside, ignoring that breaker block. So now what I'm expecting price to do now, So move from this point, it is on the breaker block, then push to the downside, triggering this our next breaker block at this point. So certain price will come to trigger this breaker block I circled on that point there. Then you see a sudden movement to the upside. You see a sudden movement to this upside now, creating another break of structure, creating a final break of structure. Remember, the last valid break of structure price created was this break of structure. That's the last valid break of structure. So now if price should break above this high, this point will be the final break of structure here. So this point will be the final break of structure. This will be the final break of structure. And after a break of structure, what should you do next? You look for a breaker block or an order block. So now if you should go to a higher time frame, you can clearly see coming. If you should go to a higher time frame, you can clearly see this is an order block here. That's an order block, and you see price on gold doesn't use an order block when it's moving in like it's creating break of structures. Gold usually use a breaker block and it ignores the order block most times. So now if price should move from this breaker block here, price should mitigate that breaker block, then push to the upside, breaking above this order block here. So when price creates a break of structure, this order block here will automatically turn into a breaker block. Then you see price retest on the breaker block, then push to the upside again, creating another previous high. And for a breaker block to be valid, what did I tell you? There must be a liquidity grab. So now this is the last liquidity here. This breaker block now is protected by this liquidity. So now if price should move from this region, after mitigating this breaker, or if price should move from that region down to mitigate this breaker block and push to the upside, this point there will be a liquidity grab at that point, telling you the breaker block, this other breaker block at this point now is valid. So if there's a liquidity grab here and you see price push to the upside, that will automatically tell you this breaker block is valid. So this is how you can always get setups using this break of structure. You can always mark your break of structure like this. Each time you open the chart, first thing, look for where price creates a market structure shift. So now if price now move from this point, from this breaker block, now price move from this breaker block, taking out this previous low. So now this previous low, when you open the chart next week, now this previous low now will be the next break of structure, the final break of structure. To be the final break of structure. That's if price move from this point down, it will be the final break of structure. But if price didn't do that, or let's say price creates something like this, let's say price move from this point here, then push down again like this, for example, push down again, then mitigate, and you see something like this. Let me remove this stuff. Then you see something like this now, for example, this point now has automatically turned the market structure shift. So now you see price come back again for the order block that will be created on this low. Then you see price creating multiple break of structure, just like that, to the upside. See multiple break of structure to the upside, just like that. breaking above every previous high, just like that. Why, if price move in this other pattern I drew before, if price move in this other direction, triggering this breaker block, then you see price distribute to the downside. Start distributing to the downside, you see price again coming back again, breaking above this previous high. That this point automatically turn into a market structure shift, meaning the downtrend is not valid anymore. So this point has automatically turned into the market structure shift. Then you see price come down again for the order block. That's if there's an order block here, price will come for the order block. But if there's no order block, but there's a breaker block here, price will just use the breaker block. Price will just use the breaker block, then keep going higher. But if there's an order block, price will come for the order block before pushing to the upside. So this is how you can always get setups, and how you can always know when price is creating a break of structure or where price has created a market structure shift. So those of you asking me how to spot a break of structure, this is how you can always spot a break of structure each time you open the chart. So first thing, you look for the market structure shift, look for where price has retested on the breaker block or an order block. Then you look for where price has broke through a previous high or a previous low, then you mark that as your break of structure. Then the next thing, you look for where price has retested on another order block or another breaker block, breaking above previous high or the previous low. Then you mark that again as your break of structure, just like that. So that's how you can always spot your break of structure. So make sure you subscribe to my channel so you can always get updates on my videos. So my next class, I'll be talking about how to use the order block correctly, most especially on Euro USD. So stay tuned, make sure you turn on the notification bell so you can get updates when I upload those videos. Thank you.